to our focus of the day. The outbreak of COVID-19 has come with economic and health crisis in most countries. The outlook for Nigeria's hitherto fragile economy has worsened due to this pandemic. The Nigerian banking industry has had its fair share of the macroeconomic headwinds, which has resulted in declining margins and significant write-offs of impaired loans. While on the path to recovery, the banking industry is now faced with the coronavirus pandemic, which comes with greater uncertainties and unpredictabilities of events in the business environment. Many reports have revealed that banks are significantly exposed to several sectors, which includes oil and gas, manufacturing, real estate, public sector, construction, and general commerce. Now, many analysts suggest that the coronavirus pandemic will weaken the assets quality of the Nigerian banks in view of the impact on state governments, finances, purchasing power of households, and the performance of businesses. Also, the sectorial allocation of loan portfolios will determine the extent to which the assets quality will deteriorate. Subsequently, economic analysts have revised non-performing loan ratio expectations to 13% in the short term due to the coronavirus pandemic, as against the initial 9.4%. This is based on the assumption that the average crude oil price will be $30 to $35 per barrel. Joining me now via Skype from Abuja is the Managing Director, Chief Executive Officer of Jaiz Bank, Mr. Hassan Usman. Thank you very much, Mr. Usman, for your time.
Thank you for having me. Good afternoon.
Yes, it's great to really have you on the show. Now, since March this year, the global economy, including Nigeria, has been disrupted by COVID-19 pandemic. Now, has it been different for Jaiz Bank?
Well, you know, this is a systemic issue that affects all institutions, households. Everybody is affected. So Jaiz is not an exception. What is important is how are we coping with this situation? It's health crisis turning into an economic problem. So the first thing is to secure our staff and customers to ensure that they are safe and we have a safe environment, reduce the number of both customers and staff on site, try to emphasize more of channels, staff working at home, some working in the office, and so that we can provide and support our customers to continue doing what they do, their businesses, and support households and businesses as well. This has been what we've been trying to do to ensure that the impact of this pandemic has not become a big problem for the institution.
Indeed. I was also thinking about the bank's survival strategy, because in 2016, the bank's license was upgraded to National One. Does that mean that Jaiz Bank is now operating in full capacity of a national bank?
Yes, like you said, June 2016, we got upgraded from a regional bank to a national bank. When we started in 2012, we had only 3 branches. By now, we have 40 branches, and we have in almost all the geopolitical zones of the Federation. So in terms of our offerings, physical and as well as virtual, we are truly national now.
Okay. Now, what is the outlook of the bank if customers' expectations and technological advancement is anything to go by, particularly at this very critical period?
Well, you see, as a young bank, we try to expand the business. We've been growing the balance sheet for the last 4 years at the rate of about 50%. Our customer base has grown significantly. Our profitability, 2018, 2019, double. This year, in spite of COVID, our first and second quarter results have also shown promising result. It's an improvement over the previous period in 2019. I'm not saying that we are not going to be affected by COVID, but I'm saying that so far, so good in terms of year on year and also quarter on quarter basis. Our performance has been very good.
That sounds very good to see that the banking sector still has that stability. At this time, Nigerians will really be happy, and they'll be happy hearing that so much success has been recorded in the past few years, especially the last financial year. Can you take us through all of this, and what are you really doing differently?
Well, our model is to share risk and return with our customers. Basically, what we do, we partner with our customers, we buy, sell to them, we lease to them, we partner in their business and share profit or loss together. This is the model that we operate, and this model is a growing model all over the world. It's growing at the rate of about 15-20% world over. And as I mentioned, in our own case, for the last 3 years, our balance sheet has been growing at the rate of about 50%. Last year, we closed, that's 2018, we closed at 108. By the end of December 2019, we were at 162 billion naira. So you can see the increase of almost 68%. Similarly, the profit we earned in 2018 was about 900 million. In 2019, we closed with 2.1, which is more than 100% increase in profitability. So the model is coming up and is working, and you can see also the federal government has cued in by taking some of the product like the scoop, which, as you know, we had last month the third tranche of scoop was issued, which was oversubscribed almost 400%.
That's also but your bank is a non-interest bank, meaning that customers don't get interest on bank loans granted them. Now, how do you operate? Because it should be all about making profit.
Yes, as I mentioned, a non-interest bank is like a trading house. Customers come and they say they want loan. We said, well, what do you need money for? We want to buy raw material. So we buy the raw material, we sell to them with a markup and give them time to pay. They need to buy a factory machine, or an individual like to have a mortgage. We buy the house and we lease the house, and he pays rentals and then at the same time buy the bank out. So in this way, we get rentals or profits markup. This profit markup and rentals is the income that comes to the bank, and it's what we share with our depositors. We also pay for overheads and, of course, also pay a dividend out of it.
Before I move on, you were looking at the season, you've also identified because of COVID and all of that. Now, what other challenges would you say financial institutions like yours, what other challenges are they facing at this time that needs to be addressed? Because many, I would say, even government securities that you touched on, many are saying are not really attractive anymore at this time.
Well, you see, COVID has brought a lot of disruptions. Customers are unable to get the required dollars to open the LCs. Correspondent banks are unable to support the banking sector as they used to do, because they have some outstanding obligation that they needed to settle. So it's the challenge is that I believe hopefully, as the global outlook start to get improved, we will reduce some of these challenges, perhaps before the end of the year, and maybe by first quarter, perhaps we get to some level of normality where we resume a relationship with our counterparties all over the world in a normal mode.
Let's not talk about your unique service propositions. Tell us about that.
Our proposition is that we, as a model, we share risk and return with our partners. We trade with them, we partner with them. We are more likely to listen when they are in difficulty. Our model also allow for us to give forbearances for delay in payment when these delays are not deliberate. In other situations, you have a compounding of interest which generates unsustainable financial obligation. In our own case, forbearances are available for customers that are in very difficult situation, which necessitate us listening more and giving that forbearance. So we do not have the compounding effect in our own system as in the other system.
Well, finally, before we let you go, we know 2020 is really a challenging year. What more should we expect from you moving on in the year and your bank?
We are cautious, but we believe that current first and second quarter performance is likely to be maintained, and that although this year is challenging, we believe that we will not have degradation of our performance of last year, God willing.
It's good to leave it on that note. I've been speaking with the Managing Director, Chief Executive Officer of Jaiz Bank. It's been very interesting talking to you, Mr. Hassan Usman. Thank you for your time.
Thank you very much for having me.